Greetings, aspiring investors. In the dynamic world of the stock market, knowledge is your most valuable asset. Today, we're delving into the fascinating realm of technical analysis. Imagine you're a detective searching for clues. Technical analysis is like examining fingerprints and footprints. It focuses on patterns and trends from historical price and volume data. Analysts believe history often repeats itself. They look for recurring patterns to predict future price movements. It's about understanding probabilities and managing risk. It empowers you to make informed trading decisions. Technical analysis is like learning a new language. It takes time, practice, and patience. But once you grasp its principles, you'll gain valuable insights into market sentiment and trading opportunities. So let's embark on this exciting journey together and equip ourselves with the tools of technical analysis. Let's dive into the practical application of technical analysis. We'll use real-time examples from the Nifty 50, focusing on Tata Motors. Tata Motors, a prominent player in the Indian automotive industry, offers a compelling case study. Let's analyze its recent price movements. As you can see from the chart, Tata Motors has experienced periods of both upward and downward trends. Technical analysis helps us identify these trends early on and capitalize on them. By applying technical indicators, we can gain insights into the stock's potential future direction. For instance, we can use moving averages to identify the prevailing trend. We can also employ the Relative Strength Index, or RSI, to gauge the stock's momentum. Additionally, the MACD indicator can provide valuable signals about potential trend reversals. These are just a few examples of how technical analysis can be employed. Remember, the key is to combine these tools and interpret them in conjunction with other factors, such as market news and company-specific developments. Now, let's shift our focus to another Nifty 50 heavyweight, Infosys. This IT giant is known for its global presence and innovative solutions. Just like with Tata Motors, we can use technical analysis to gain insights into Infosys's stock movements. Looking at the chart, we observe distinct patterns and trends. By applying technical indicators like moving averages, RSI, and MACD, we can identify potential buying and selling opportunities. For example, a break above a key resistance level on the chart, coupled with bullish signals from indicators, could suggest a potential uptrend. Remember, technical analysis is not an exact science. It's about understanding probabilities and managing risk. It's essential to combine technical insights with fundamental analysis and market awareness. Moving averages are like smoothing filters. They help us see the underlying trend by averaging out price fluctuations over a specific period. A simple moving average, or SMA, calculates the average price over a set number of periods. For example, a 20-day SMA sums up the closing prices of the last 20 days and divides by 20. An exponential moving average, or EMA, gives more weight to recent prices, making it more sensitive to current price changes. EMAs react faster to price movements than SMAs. Traders often use a combination of SMAs and EMAs with different time frames. For instance, a trader might use a 50-day SMA to identify the long-term trend and a 20-day EMA to spot short-term trading opportunities. Moving average crossovers are popular trading signals. A bullish crossover occurs when a shorter-term moving average crosses above a longer-term moving average. Conversely, a bearish crossover happens when a shorter-term moving average crosses below a longer-term moving average. Section 5. Momentum Playbook. Unveiling the RSI. The Relative Strength Index, or RSI, is a momentum oscillator. It measures the speed and change of price movements. The RSI oscillates between 0 and 100. A reading above 70 is typically considered overbought, while a reading below 30 suggests oversold conditions. Traders use the RSI to identify potential trend reversals. For instance, if a stock has been in an uptrend and the RSI moves above 70, it could signal that the uptrend is losing steam. Similarly, an RSI below 30 in a downtrend could suggest that the selling pressure is weakening. However, it's crucial to note that the RSI should not be used in isolation. It's essential to consider other factors such as chart patterns and market conditions. Divergences between the RSI and price action can provide valuable trading signals. For example, if the price of a stock is making new highs but the RSI is failing to confirm, it could indicate a potential trend reversal. It could. Section 6. Trend spotting with MACD. Riding the momentum wave. The moving average convergence divergence, or MACD, is another popular momentum indicator. It shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26-period EMA from the 12-period EMA. The MACD fluctuates around a zero line. A bullish signal occurs when the MACD crosses above its signal line or the zero line. Conversely, a bearish signal happens when the MACD crosses below its signal line or the zero line. Traders use the MACD to identify potential trend changes and generate buy or sell signals. Like other indicators, it's crucial to use the MACD in conjunction with other technical tools and market analysis. Section 7. Beyond the charts. A glimpse into fundamental analysis. While technical analysis provides valuable insights into market sentiment and price trends, it's crucial to complement it with fundamental analysis. Fundamental analysis focuses on a company's financial health, industry position, and management quality. Key metrics used in fundamental analysis include revenue growth, earnings per share, and the price-to-earnings ratio. Revenue growth indicates a company's ability to increase its sales over time. Earnings per share measures a company's profitability on a per-share basis. The price-to-earnings ratio compares a company's stock price to its earnings per share. By analyzing these and other fundamental factors, investors can assess a company's intrinsic value and its potential for future growth. A strong understanding of both technical and fundamental analysis provides a well-rounded approach to investing. Section 8. Converging insights. Tata Motors and Infosys revisited. Let's revisit our examples of Tata Motors and Infosys. By combining technical analysis with fundamental insights, we can make more informed investment decisions. For instance, if Tata Motors is showing a bullish chart pattern and its fundamental indicators, such as revenue growth and market share, are also positive, it could present a compelling investment opportunity. Similarly, if Infosys exhibits bearish technical signals and its fundamental metrics, such as earnings growth or profit margins, are deteriorating, it might be a sign to exercise caution. Remember, successful investing involves aligning both technical and fundamental perspectives. By considering both the technical and fundamental aspects, you can make more informed decisions and potentially improve your investment returns. Section 9. Practical pointers. Your first steps in technical trading. For beginners venturing into technical analysis, here are some practical tips. Start with a simple charting platform and basic concepts. Avoid complex indicators initially. Begin with moving averages, RSI, and MACD. Paper trade before risking real money. Use demo accounts to practice strategies. Start with a small amount of capital. Investing involves risk, and losses are part of learning. Stay informed about market trends and news. Complement technical analysis with market understanding. Section 10. Chart your own path. The journey to market mastery. In conclusion, technical analysis is a powerful tool. Combine it with fundamental analysis and consistent learning. Remember, the market rewards patience, discipline, and continuous improvement. Embrace the learning process and never stop seeking knowledge. As you embark on your investment journey, remember that success in the stock market is a marathon, not a sprint. There will be ups and downs along the way, but with perseverance and a commitment to learning, you can navigate the complexities of the market and achieve your financial goals.